For the Street in New York, I'm Jill Malandrino with the trading week ahead. Let's quickly take a look at the 5-day on the S&P. While the market hit a new all-time high, action has been very quiet and range-bound throughout the session, with the exception of some extreme moves at the close, normally to the upside, making it frustrating for traders to discern what direction the market wants to take. This is a week that left many scratching their heads as valuations continued to move higher and currency and rate volatility remained high. Moving along to the trading week ahead, we are heading into the Memorial Day holiday weekend, which means it will start to get quiet on Thursday and Friday as traders and investors kick off the unofficial start of the summer and thus Ghost Town Fridays on Wall Street for the season. Economic data for the week of May 18th include the Housing Market Index, housing starts, home sales, FOMC minutes, Philly Fed, CPI, and PPI. Expect to see some interest rate hike speculation chatter around the minutes and manufacturing data. And of course, the commodity, US dollar, and foreign currency trades. The earnings calendar will give more insight into the consumer and housing market in addition to the economic data. Housing derivative stocks like Home Depot and Lowe's will report on Tuesday and Wednesday, respectively. The one-year performance has been quite impressive, with Home Depot up 48% and Lowe's up 63%. On the retail front, sector bellwethers Walmart and Target report, as well as TJ Maxx, Urban, and The Gap. Light sales comps out of Macy's, JCPenney, and Kohl's this week put pressure on the group. I want to remind investors that retail of all sectors is a tale of the haves and have-nots, with discernible out and underperformers. So what we saw for retail this week could be a different story in the trading week ahead. Also watch for earnings from tech heavyweight Hewlett-Packard and actively traded Salesforce.com, as speculation is out there that companies like Microsoft, Oracle, and IBM could be interested in a bid for the software company. Crude's run appears to be more technical in nature because fundamentals remain weak. The supply glut is strained, and even if crude does get back to 65 or higher, producers will start to bring shuttered wells back online, which will further exacerbate the oversupply situation in a low-demand market. Until the underlying story improves, traders see oil trading sideways with some notable pockets of volatility. Finally, gold continues to trade around that key $1,200 level as it broke through $1,225 but failed to hold. Traders expect more range-bound action around interest rate hike speculation and the move in the US dollar, as fundamentals for the yellow metal have not really changed either. For the Street in New York, I'm Jill Malandrino with your trading week ahead.